Welcome back to the channel, guys. I want to talk to you today about something, you know, that some of you more advanced guys need to start thinking about, and some of the things that you can apply to help yourself make money in your career. You know, you newer guys, still you need to be thinking about it, because before long, if you keep doing deals, you're going to want to be, you're going to be one of these guys that have more experience. So for some of you folks that are a little bit more experienced, I want to talk to you just a second about the fastest way to sell a house. Okay? Fastest way to sell a house, bar none. Okay? And some of you guys already know this, but you might want to just think about it and listen, because there may be a twist or two that you don't get. So I wrote a book on this, selling houses fast in any market. I haven't. Yeah, I should go on and publish it and put it out there, but I'm going to talk to you about this today, so that you know it's recorded in its own video, and you can go back to it and watch it again. Pick up your cues and your keys and stuff off of it, the keywords and stuff that's going to help you. Remember, not offering any tax advice, not offering any legal advice. I'm just telling you sound real estate investing principles. All right, and that's what we key on this channel. That's what this channel is about. You know, we never give up. And we only talk about and promote and show sound real estate investing practices. Okay, so you know, you got a house. Let's just say America's House, 123 any street anywhere in America, and it's mildly rehab. You know, it may need a little bit more, but it's livable. It's not bad condition. You know, and you don't want to put any more money into it. Or even if it's one that you've put a bunch of money into, you know. Or maybe you're a tired landlord. You're tired of toilets and tenants. You know, maybe you're tired of chasing them. Maybe you don't know how to structure that properly, and get yourself tenants that don't tear your house apart, because it is a real thing in the industry. I mean, it's when they do it, it's too late. You can go after them legally, but it's still too late. You know, you need to have good tenants in place to avoid some of that. But the fastest way to sell houses, to sell them in any market, whether the market's increasing, decreasing, or anything in between, and to get the best price. Okay, so we want to focus on the best price. We want to focus on any market. Doesn't matter, you know, if it's a rental market, if it's a decreasing market or an increasing market or whatever, and we want to sell them fast. We don't want to hold houses for 6 months trying to sell them whenever we could sell them today. Now, if all you want is cash and you just want to sell your house for cash, you know, I encourage you to get a real estate agent, because they'll get the highest and best price for your property. You know, that's their job and that's what they do. And I use them to sell. I don't use them to buy, but I use them to sell, and that's their job, and they're good at it. But if you don't have to have the cash today, okay, and you don't need to sell that house for cash, but you still want to sell it, one of the absolute best ways. Now, you can do owner financing, yes, you can do. And there's multiple ways, and these are kind of all the same techniques, just wrapped into different ways. You know, you can do a rent to own. Rent to own makes it easy to kick people out if they tear your house up or they don't pay. Month-to-month rentals are kind of tough. They're really tough, because the people that do month-to-month rentals typically, let's just say they're not the most upstanding citizens a lot of times. But if you want to sell your house fast, you want to get a good price for it, and you want to give someone something that they cannot get anywhere else, a lease option is your best deal. Because with a lease option, now you're offering that buyer something they can't get anywhere else. Let's just say that they've got, you know, marginal credit, and most of them will, because the people that have good credit and plenty of cash, they're just going to go buy a house they want. That's not your customer. You're a real estate investor. You want to sell your house fast and not have holding costs for months. You don't necessarily need the cash, because you're going to have to pay capital gains on it, or you don't need the cash because you just want to get monthly income. So a lease option is a great way. And you've given that person pride of ownership. When you give them pride of ownership, they don't tear your house up. They don't call you at 3 o'clock in the morning with the toilet plugged up. It's one of those things that investors use to create wealth and to create positive monthly income, and to keep their houses from getting tore up. Now, renters, month-to-month renters, even a lease without a lease option, still doesn't give that person pride of ownership. Pride of ownership is a big deal to someone that actually wants to buy a house. They just don't qualify under a bank. So the goal is, let's say you sell the house today. 3 years from now is your lease, a 36-month, 60-month, whatever you decide. You can write into your lease legally. Now, they're not offering legal advice, but in most cases, you can write into your lease. Let's just use a number and say the house is worth $200,000 today. If you sold it for cash today, that's all you can get out of it. So if you're getting 3 to 5% in appreciation, well, in 5 years, you're going to get 5% per year, okay, in appreciation, which is going to therefore make you more money. So you've given the person pride of ownership. You've gained a higher rate of return. You can typically charge a little bit more for the rent on it, or the lease payments, whatever you want to call it. Let's just say that a normal payment in that area is $1,500. Well, you may charge them $1,700. Okay, it's how you structure your leases to make money, your lease options. And $200 of that goes towards the purchase price, or $100 of that, or however you want to structure it, so that whenever you get to the end of the lease option, let's just say that your goal is to really sell it to them. You want them to take the option. At the end of 3 years or 5 years, they have a quote-unquote down payment built up. So a bank would look at that as long as they've paid you on time. Okay, they've paid you the right amount. Now they have a little bit of credit into the house because they've paid on time, and they have some option money that is given to them to discount the price a little bit. All right, you gain a good tenant that's not tearing your house up and costing you thousands of dollars. You gained a better monthly income. Okay, it's paying the taxes, the insurance, and the note on it, while they're in there, and you're making some positive cash flow for yourself, and it gives them pride of ownership, so they don't tear your house up. So, for me, in my thoughts and experiences and so forth, that is the best way to get away from renting month to month on a house, because the month to month people, like I said, they don't have pride of ownership. They're not looking toward the future of possibly buying the house. Now, in all reality, most people never exercise the option. If they have marginal credit, and they need to build their credit, well, that gives them 3 or 4 or 5, whatever you make the lease for, years, 2, 3, 4, 5, whatever, to get their credit built up. Okay, you're giving them a positive credit rating because they can show every month that they paid you. They've got a little bit of money in the down payment now. They've got a fairly nice, home, and they have the option to go and get a conventional loan and cash you out. Now, if they don't do that, well, they still got options. You could say, okay, I'll tell you what, it's been 36 months. You've been a good tenant. You've paid me good. I'll tell you what we'll do. We'll extend it and write a new lease for another 36 months. Well, now you get to write 3 years worth of appreciation into that lease. You get to negotiate the payments, okay? And they still got pride of ownership. And they're still not tearing your house apart. They're not calling you to maintenance, because in your lease option it should say, that the things that go wrong, other than let's just say something major like it had to have a roof, but typically, that's not an issue. But, if they need a door hung because the door's broke, or a window got busted, or the toilet's plugged up, or it needs a new shower, well, that's on them, because they're lease optioning to buy that. And that should be written into your lease, is that, barring something major, they pay for it. They fix it. They broke the window, it's their job to fix it. They plugged the toilet up, it's their job to fix it, not yours. Because they have pride of ownership, they will. And they won't call you and they won't bug you about it. And it'll be a much, much easier way for you to sell your house fast, and get the most money for it. And like I said, you're offering them something they can't get anywhere else. Now they've got a house that they can call home. They've got pride of ownership. They're working toward fixing their credit, and they got part of their payment going towards their down payment. Now, at the end of the lease, don't misunderstand me and think that, let's just say they have $4,500 in down payment. You're not pulling $4,500 out of your pocket and give it to them. You're crediting it, and it says it in your lease. You're crediting them that amount towards their purchase price. Okay? So lease options are a fantastic way to sell houses, fantastic way to sell houses fast, a safe way to sell houses that takes a lot of responsibility off of you, and it keeps you from dealing with bad tenants in general, you know, and it gives them something that they just can't get anywhere else. Consider this for every one of the houses that you want to sell. Owner financing is great. It's okay, but it doesn't give you appreciation, okay? It doesn't give you a higher payment. Typical owner finance, you know, if you let them in for nothing down or 5,000 down, the payment is usually a locked-in interest rate payment. With a lease option, it's whatever you negotiate. It's not a 7% or 10% payment at XYZ dollars. It's whatever you negotiate, because everything's negotiable in real estate. So you'll get a better monthly payment than you would, and that'll create a positive cash flow where the deal may have been marginal before. Now it's not so marginal. For some of you guys doing sub-2s out there, lease option's about your best bet unless you're just going to hold the house forever. But you got to be careful what you said sub-2s, because the lenders could call the loan on you, and if they call it, ain't nothing you can do. You're done. You got to pay it. You got to somehow sell it or something, because they want their money if they call it. But it's a good way for you guys to sell houses. It's a great way for you to make money. A great way for you to keep up with. Not keep up with not keep up the house and have to do all the maintenance on the house. Okay. So there's a lot of benefits to it. There's a lot of pluses to it. Not much on the lines of downside. Really, there's not. So like and subscribe. Check out my Facebook group, House Flipping Masters, and I'll see you guys in the next video. Go sell some houses.